Hey guys, Mike here. So hope everybody had a great Thanksgiving. If you're in the U.S. here, I know I and my family did. We went out of town and enjoyed it. So, hope everybody's done well and safe on your road trips and all that good stuff. So there's one main focus I want to talk about today. And the reason why I want to talk about this is because this is what big money looks at, right? This is where the institutions will be placing their bets. And I'll kind of show you what I'm talking about here. And so if you can follow that along, you can usually ride the coattails of big money into certain plays, which is what you want to do, right? Don't follow retail investors, follow large investments, right? That's why when Warren Buffett puts out what he's bought, the stocks go up. I put that in the Patreon, what was it, a week or two ago when he released that? Like every single stock that was released saying he bought more of or bought into for the first time, like Taiwan Semiconductors, boom, huge pop, right? And so that's what you get. And so because they have a huge team over there, right? And so if he's buying into these things, people say, well, got a whole research staff, must be pretty good, right? And so what we want to pay attention to is where we are at in this business cycle, right? And I like to get this off Fidelity. I keep you guys up to date on this all the time, and I'll continue to keep you up to date. And you can see what's great about this is it breaks it down by country, because every economy is not in the same spot in the business or economic cycle, however you want to look at it. And you can see right here, I always point this out, this will tell you what to look for and why they believe this, right? So like in the late cycle, they believe the U.S. is in as we creep down, because remember we were right in the middle last time I showed you this. Growth moderating, credit tightening, earnings under pressure, policy contradictory, inventories grow, sales growth falls. So, of course, we're hitting basically all of those, right? And you see all those other countries they think is in there. But then you look over and you see the countries that they believe are in recession territory, right? And you can see UK, Eurozone. I don't think anybody would deny that or say that's not true. And then there's China, which is, if you notice, is ahead of everybody else, right? And it's because of what their government basically did over there more than anything else. And the reason that's important, and we had a debate about this the other day when I put this in the Discord, and it was right here. This shows you the business cycle and everything, and what should be going up, what should be going down. Well, the question is, now I'll pose to you: are we in stage 1? Are we in stage 6? Are we in stage 2? All right, and so this is the big debate, and we were all over the place. Some people said stage 6, some people said stage 1, some people said stage 2. And so, and I'm talking about the U.S. specifically. If you're in Canada, you might be in a different stage. If you're in China, whatever country you're in. But in the U.S., because you look at stage 6, what do you got? Bonds, stocks, commodities going down. Well, we know we've had that. But recently, what have we had? We've had bonds going up, right? And then in stage 2, bonds and stocks going up. Well, of course, we were having stocks go up. Stocks are coming down right now. But you're in this, expansion, contraction area. But if you look on stage 1 and stage 2, even stage 6 for that matter, what is coming down? Commodities, right? That's the one thing that's in common for all 3 stages there. We just got to figure out between stocks and bonds. And please don't forget to hit that like and subscribe button and share this video, guys. And so definitely let us know in the comments down below, what stage do you think we're in, right? Because remember, what happens? You got the stock market usually tries to think 3 to 6 months ahead. When I say thinks, I mean guesses. That's what this all is. We've already seen it multiple times. That's why you get bear market rallies in these down markets, because it's the market trying to read what the bond market's telling it, the smart money, who deals in risk all day long, saying, well, where are we at and what is happening, right? That's why every time you see TLT tick up or whatever, yields come down, all this other stuff, they go, oh, this is it, right? We're ahead of it, right? And I would say the easiest example of this is 2018. If you look, they were tightening into a strong economy, supposedly, right? Well, when was the bottom? The bottom was December 24th, Christmas Eve. But nobody knew that, right? The Fed didn't even announce that they weren't going to raise rates anymore until February, like February 23rd, I believe it was. Then they made the official announcement, right? So over 2 months later. But the market was already moved way up by then, because it thinks ahead. It tries to read with the bond market and take a total guess. And if they're wrong, what do? They just short the freaking market again. That's all they do. It doesn't matter to them. They're not missing out on anything. And so that's why, if you're wondering why we have these bear market rallies, stuff like that, there's a lot more reasons. But that's really the big one, especially when people are trying to figure out the bottom. Is this the bottom? Is this the bottom? But they're looking at is, hey, where are we at in the business cycle? Because we need to be ahead of that, okay? And so that's one thing. But another reason you can look at this and say, well, maybe we're in stage 1. I've heard people taking a lot of guess on that. Is because, one, you do have bonds going up. You have TLT's been going up over the last, I don't know, 8, 9 trading sessions. The RSI is looking good. A lot of momentum going in there, right? Technically now, the last 3 days it's traded sideways. But again, it doesn't matter until it gets out of this channel, which has been in since December of last year. I mean, that would be an official really breakout, right? And get above all the resistance levels, which a lot of damage on this chart, let me tell you. But, something else to look at. Look at China. China's ahead of us, right? And what have you seen happening? I think we talked about this a couple weeks ago, which was big money's been moving in. And why has big money been moving in? Because they're already in the recession phase, right? Curving up because their government just destroyed their economy. Basically is what they did with their policies. And you can see they've broken out of that channel. They've been in since July when they were just heading down fast, right? And so that is a bullish thing. It's been pulling back in the last couple of days. But the reason why is because of how fast it went up, which I'll show you when we look at JD. I mean, my Lord, a stock to go up 77% in 25 days, and it's not some kind of SPAC stock or penny stock or anything like that. That is a massive move. Still up 61% on the pullback, but it got overbought. Shocker there. And here's CWEB, 2x leverage ETF on China stocks, 140% in 24 days. Great trade for anybody got in that one. Still up 112%, right? Still hadn't broke that trend line. RSI still looks good, right? And then I'm going to show you something else on CWEB real quick, how you know big money's been rolling in here. Look at the volume, right? I mean, this is the daily. Look at that volume versus what was going on before that, the months before that. That's a lot of volume. Look at the weekly candles right here, these green weekly candles. You don't think people were rolling in right there? I mean, they were piling into this thing. And, the one big X factor on this, and some people say, hey, I think we're in stage 2. Some people say we're still in stage 6, right? Because they expect bonds to roll back over and everything. And the big X factor to all of this, which we've never had happen before. It's never happened. So you're experiencing history on so many levels. I think I said, and maybe in the morning brief or wherever I said this morning to the members, I said, there's going to be some economic books written about this for sure from 2020 to 2023-ish, no matter what happens, because it's going to be so many lessons learned. And I don't know if we'll ever repeat this again, because we'll never shut down the world again, hopefully, but you don't know. But the one thing that's happened is, look right here. Look at this Fed tightening cycle. This is us right now. Look how fast. We've never tightened this fast. Look at all this. We've never tightened this fast. We've already passed 2000, 95, 2018. And as far as the level we need to be at, look at that. We're almost there. Look how long it took 2004 to 2006 to happen. But we will be there. We will be there in a very short amount of time. And that's what makes this whole thing so unpredictable, guys. I mean, we've never raised rates into a slowing economy, ever, that we know of, at least, not that I've ever seen. And especially at this pace. And on top of that, rolling off a $9 trillion balance sheet, right? And so that's why if anybody tells you, oh, I know exactly what's going to happen, they're full of it. There's no way they actually know this. Okay, I see people that are trying to predict it every day. And it's like, good luck to you. Maybe you'll be right. But when you look at that, when you've never been through something in history, you got to see how it plays out. That's just what you got to do. I mean, I used to look at England. I mean, they're over there going, nah, we'll just throw everything at the wall and see what sticks. I mean, they're constantly changing what they're doing, and because nobody knows, nobody's ever been through this. There's no textbook that they can go pull up. That's why our economists are struggling, right? Our Fed is struggling because they have nothing to base any of their decisions on, to be honest with you. They really don't, because there's never been this many factors happening. But you look at that picture and you go, dang, man, that is fast, right? Into an already slowing economy. And so, and the other problem you have with the stock market is, what have we seen over the last decade? What pushed it up to all-time highs, right? Every single year, all-time highs. Stock buybacks, record levels, right? Record levels, they keep increasing. Free money, or basically cheap money like we've never seen before for a whole decade. Up, basically supporting a real estate market that was supposed to be strong, yet the Fed was just propping it up that whole time, right? And now we get to see where that's going to go. And, obviously, if you watch my video Wednesday, you'll know exactly where we're at on that. But, and so seeing where the stock market go, who knows? But again, just remember, when they say it's a bottom end, they're just guessing. That's all they're doing is just guessing, right? But there's always a bull market somewhere. And that's why you see money rolling into China, even though, I don't know, with the more lockdowns happening and all this other stuff over there, I don't know. I mean, again, China, to me, is a trade, not a long-term investment, because you just don't know what the dang government's going to do over there. Like, it's amazing. I've never seen a government wreck their economy more than anything else. But what are they also doing? Oh, telling banks, oh, you better lend. I don't care what you do. And if you don't, because remember, who controls the banking system in China? The government. And if you don't do what they say do, you might find yourself in a very uncomfortable place, maybe getting re-educated, okay, on who you better listen to. And so on one hand, they're trying to do everything they can to prop it up, because remember, 70% of their wealth is in the real estate market, not in the stock market. And so they got to get the house of cards propped back up, right? Because I think it's the biggest bubble on the planet, I believe, if I'm not mistaken. And so if that pops, see you later. But then, of course, with the COVID lockdowns, that's a whole another issue. They keep trying to figure out we're not going to do it. We are going to do it. Who knows? I mean, and so, let me know down in the comments what you think. I definitely want to know, where you think we're at in the cycle here. What do you think of China? I mean, do you think they're going to start heading up and big money's going to keep rolling in there? Or is this more of a short-term trade, you think? So anyway, hope you guys have a good one. Again, hope you had a great holiday, and I'll see you later.